weekend. So there we have it, heading for a fourth straight week. Granted, it's only opening minutes of the fourth week. Susan, back over to you.
Okay, Steve, so how do you pick Chinese stocks these days? Well, you may want to listen to our next guest. That's because her China Opportunity Fund is up 42% over the past 12 months alone. That's the best return among 173 Asian long-short equity funds that we cover. Lillian Co is Chief Investment Officer at LBN Advisors, which oversees more than $140 million. Lillian, welcome to the program. Now, we were hearing Stephen Engle there about the A-share market maybe going into a fourth week of, I guess, gains, but you're actually remaining cautious these days. And yeah, you say that maybe the risk-reward isn't so attractive anymore.
I think after 4 consecutive months of positive gains, the market needs a rest anyway, and the market valuation of the H shares is around 14 to 15 times PE. It's not very cheap, but not yet excessively expensive. So we are now kind of stuck in the middle of nowhere. If you look at the recent momentum of the stock market, we are likely to reach the 07 peak by the end of this month, which is just very unlikely. So I think the market needs a rest anyway.
Sorry, I just want to pick up quickly on what you just said. You said we're in a mid-cycle range in terms of valuations. What does that mean? I mean, 14 to 15 is mid-cycle?
If you look at the historical trading range, it usually ranged from high single-digit PE to 20 times PE. So we are now kind of stuck in a mid-cycle valuation. And if you look at the underlying fundamentals, I think we have not yet get to the mid-cycle economy yet. So the valuation seems to be ahead of fundamentals, probably by 1 or 2 quarters, in my opinion.
Good morning, Lillian. Stephen Engle up here in Beijing. If you think the market's getting a little ahead of itself, granted Shanghai Comp up 70% now year to date, what's going to be the trigger point for selling, and how much of a correction are we going to be seeing?
I think it probably would be more driven by what happened in U.S. If the U.S. market stocks starts correcting, then you're likely to see the Hong Kong market to follow suit. But I don't see a big correction. Probably 10 to 15% correction is the max you're going to see, given the strong liquidity in the market. In fact, many investors are waiting to buy on weakness. And when everyone is looking to buy on weakness, you're not going to see much of the weakness.
And then what does this, well, I wouldn't say a surge, but I guess opening the gates again to the IPO market, the moratorium has been lifted. We've seen a number of companies at least make their applications for initial public offerings. What's this going to do to the market if indeed what happens, what you predict to happen is going to happen, that the market's going to have a little bit of a 10-15% correction period just at a time when IPOs come onto the market? Where do you see the demand, will demand maintain for those new listings?
It depends whether these new IPOs have a good theme or investment story. For example, if it is a investment theme that is greatly sought after by the market, like new alternative energy, then I think investors will still fall for these IPOs.
Okay, Lillian, let me just ask you, because Steve brought up the point about IPOs hitting the market, and with IPOs, doesn't that come with more trading volume? But you're advising investors to go short on Hong Kong exchanges, even though we've seen volumes pick up in the last 6 months. What's the thinking behind this advice?
It's more on valuation concern. The stock is now trading at 30 times this year's PE, and based on the current valuation, you're probably pricing in a 70 billion Hong Kong dollar daily turnover for the rest of the year. So it's pricing in a lot of expectations. So you need to be very convinced of the strong rally to continue in order to support a further re-rating of the stock. But at 30 times PE, I probably don't want to take that kind of bet at the moment.
And how much downside is there to this stock, to Hong Kong exchanges then?
Well, if the stock market goes down by 10 to 15, being a high beta stock, it can easily go down by 20 to 30%.
Okay, so it's looking a bit expensive these days. Well, before I left off there and talked about Hong Kong exchanges, we were talking about alternative energy plays. And one of the most popular names that I keep hearing, and one that you're advising to pick up as well, is China High Speed, which makes these gearboxes for these wind turbines. Let me just ask you about this particular stock. You know, China High Speed has come a long way this year, up 80% or so. I mean, how much more is there in this stock?
In my opinion, it's more like a core holding. I think another 30% upside can be expected in the next 12 months. It is trading at around 15 times next year's earnings, but it has high earnings growth with actually strong earnings visibility. Its order book is already filled up to 2010. So with this kind of valuation, if you're not too sure about the market, you really want to hold on to something that has high earnings visibility. And I think this is the one.
We have 20 seconds here, but why this company that makes these gearboxes for wind turbines? Why not another alternative energy play like solar panels?
Well, it's a dominant player in the market, so it already has, is proven 70% market share in China and globally cost competitive. So.
Okay, Lillian, we're going to get back to more of your China picks after this. Stay where you are. So, as you mentioned, more China picks with Lillian. And of course, we're still waiting for your emails as well. So send them along at asiaedge@bloomberg.net. We'll be back in 3. Stay with us.